A lot of what we do in the market is waiting for opportunities to come to us. We need to imagine that we are tigers waiting for the prey, or perhaps a house cat just waiting for you to walk by, and then it's going to sink its weird little paws into your calf and make its presence known. We're going to wait for setups. So what I'm going to do today is I'm going to walk through some setups. I did a midday show in Chart Guys. We cover the market live 3 times a day now. And these are tickers that were brought to my attention during the midday show. And these are the setups as we saw them. So we did a real-time analysis on it for our members. Let's talk about the setups. We're going to go do a few examples today and see how they played out. So the first one we're going to check out is PayPal. 15-minute time frame. So we had already seen a pretty significant run. Very, very strong day. Minimal consolidation early on and consecutive higher lows on each candlestick. So the very lowest price on each candlestick is always getting higher. Finally, we start to cool off. We cool off by setting 15-minute inside bars here, so the range is getting tighter. So as we see that range getting more and more compressed, the moment we lose our consecutive higher lows, that generally kicks off the consolidation. Now on the 15-minute time frame, we haven't really set 15-minute higher lows anywhere in here. If the bears wanted to apply pressure, they could absolutely start knocking out some stops and knocking out any of the stop loss orders set on these consecutive higher lows. That's what we got to be watching out for. So let's talk about what we saw. This is when I saw the ticker. I'm checking out these 15-minute inside bars, and I say, you know what? Let's take a look. We know we got a tightening range. We know we got equilibrium. Let's go to the 5-minute time frame and see what's going on. Definitely what we expect to see. But the 2-minute time frame was a thing of beauty, a perfect equilibrium. We have this massive move to one side. Then we see a counter move as strong as it can be to 243.63, still holding 2-minute higher lows. So that's a key thing to watch for. This is why we're still getting those overall 15-minute absolute lows higher than the next. We get into a lower high, higher low, lower high, higher low. We're watching these ranges develop, and as we watch a equilibrium form up, we need to be paying special attention to these tightening ranges, because generally the break of one of these levels is going to kick off either an upside move or a downside move. 2 possible scenarios. We break 244.72, then we're going to test a new high day. We break 243.95 here, this little level, we're going to be looking for significant downside action. Now the key here is, and what you're going to see right away, is if you set new lower lows and you don't get any follow through while being this extended on the 15-minute time frame, it tells you that there is no bearish presence. This is an opportunity for the bears, and in fact they've used most of their effort to push the price to this point, this 243.63. Now they're going to battle it out. So let's take a look and see how this develops. Again, we're watching for a break of one of the 2 key levels. Let's go. We're moving forward. Now we see a loss of 243.95. We set a lower high and we broke our equilibrium to the downside. So we need to keep an eye on 243.63, 243.88, and we're going to be watching volume as we approach both of those levels. So what I need to do is make sure I've got my handy little visual guides here. Now we're going to move the price forward. We break 243.63, a little bit of volume, but nothing significant. A little bit more. A nice little test. And then we move to the upside. So overall, we're still holding the ultimate low here that we talked about, 243.48. We're setting new lower lows. The EQ has broken bearish, but now we're seeing a bounce. So there's absolutely no follow through on this play. So at this point, how effective was our equilibrium? Did it signal a downside move? It did, but it didn't have a lot of gusto behind it, not a huge amount of volume, and we didn't knock out a couple of these support levels that we had. So it is at this time you need to step back and analyze and say, okay, we had our EQ break. We saw a move to the downside. We saw new lows. What could this mean? Well, let's clear our charts. Let's step back and say, all right, this is starting to look a little bit bear flaggish. A bear flag, if you don't know, is a nice consolidation pattern after a breakout. We look for trend lines. We look for support and resistances. And we draw ourselves a little bit of a channel. So let's copy that down. Maybe we'll get it. Maybe we won't. Here we go. So this would be a channel that we'd be looking for to play out. So go back to our 5-minute time frame, take a look at things, see how they're shaping up. You know what? We got a little base of support here. We got our trend line. Maybe this is a 5-minute flag. Why don't we try that? Drag another little bit of support up here. Maybe this is going to be a 5-minute flag. So we take that clone parallel line, we bring it up to our support. Overall tightening range. Let's go back to the 2-minute time frame and see how it develops. So at this point, we have our lower low. We still have a 2-minute downtrend, so we're going to be expecting a lower high under 244.65. We see the price still grinding this area of resistance. So we've connected this high and this high. We're now looking for a flag type setup. What we're going to want to see is an uptick in bull volume, and we're going to want to see the price over top of this trend line into a higher high. At this point, our 2-minute resistance is going to be this magical little number here, 244.31. Managed to break both the trend line resistance and the price action validation, and we got ourselves the potential for a pretty good bull flag break. Come up right against that, break it by appears to be 1 penny, and then we see some bull action coming into play. So this is exactly what we want to see. And was our high, I believe 245.15, something in this range, right about there. So a beautiful little combination of two things, an equilibrium with no bear follow through. When we have no bear follow through, we look for consolidation. We look for patterns and consolidation patterns that are going to give us a bull opportunity. Beautiful bull flag setup, nice trend line for resistance, and then we get some good follow through to the upside. Should we go and set a 2-minute high or low? And I think we actually continue pretty good for the duration of the day. So, not a bad one overall for PayPal. All right, the next example is actually going to be 2 tickers. They're very similar in setup and execution. We're looking at GRWG 2-minute time frame, and by the time we look at this, we're doing an overall assessment, right? We want to figure out what's happening. I'm looking at the range. We see that we have lower highs and lower lows, so I start speculating. I'm always drawing, always trying to figure out what's going on here, and I try to make a case for a wedge. The problem here is that we only have 2 points of contact for both our resistance and our support. The support hasn't even really been validated because we haven't moved away from this low. We need to see that low come into place, and we need to see the price drive to the upside. The issue here is that we didn't really do that. Every 2-minute time frame managed to grind that area of support, and eventually, because it grinds that area of support and holds it, that becomes a more effective area for us to play against. So we gain confidence, even though we haven't moved away from it and set a lower high against resistance, we're still comfortable with this as it develops. So as we approach that area of resistance, we're looking for an uptick in volume. We see a tiny little bit, nothing really remarkable. But what is really key on this particular one is the fact that we break above, close above twice, back test that area as a support, and then what do we see? The price takes right off. So really nice descending wedge pattern, get our nice breakout, nice back test and validation, 2-minute higher lows, and off it goes. Second ticker with a very similar setup, we have XL on the 2-minute time frame. We do the same thing. We draw in, trying to figure if we can box in this range. We come back over here. We haven't confirmed this area of support, so it could be a wedge. It could be anything. We need to be pretty open to whatever we may develop into. We set new lower lows. We just constantly adapt our pattern. So let's go take a look at that. Say we decide that we're going to use this one. We need to see what our next flag or our next bar does. In this case, it breaks bull, locks in this as a 2-minute area of support. And then we come back down to test it again, hold above it, we're more confident in it, test again, hold above it, confident in it, 2-minute inside bar, and then we get a bull break. So a nice execution of another flag. This one, I believe, just got over top of 2284, which may be the height of this candlestick here. But another example of using price action speculation, using patterns, and a little bit of bull volume here as we break out over top of that. And then we just play our 2-minute higher lows and ride that entry into profit. I think I'm going to do one more today. Maybe 2 more. Let's start with NVDA, 5-minute time frame. The problem with this was that NVDA has been all over the place here. There's not really a lot of clarity. And the reason for that is that we have inside months. We had a huge run up and we're getting inside months and inside weeks. When you have inside bars doing inside bar stuff, you tend not to get a lot of follow through. You get chopped around a lot. So we have to be really microscopic in terms of what sort of patterns we're going to play. If we have to focus on NVDA right now, we need to be really particular about what we're going to be looking for. This was a chart that was presented, and right away, 5-minute time frame, not so interested in all of this, right? 541 gets a higher high, no follow through. We get a base of support here, no follow to the downside. That is what choppy is. It's going to fake you out and make you stop out, and it's not a lot of fun. So you need to really hone in on small time frames that have a more forgiving nature if you are quick on your feet. So we're taking a look at this, and I can see right away we got ourselves a little boxed range. A boxed range is just another form of compression, sideways consolidation. We have almost a quadruple top. Multiple candles here showing us a major area of resistance. We have 538.33 as our low. And if we go to the 2-minute time frame, we can see that even more effectively displayed. See how we keep grinding this area of resistance, 540.25, 540.26, no follow through, 538.63. We're going to be waiting for one or two things to happen. Remember, we're technical traders. We don't really care what happens. We just want to wait for the setup and get into a long or short position to be the most beneficial setup for us. So we're moving forward. We're watching. We're waiting to see what happens. We come up against our 540.26. Again, pull back. So another area of resistance. We come back down. And we're just going to keep doing this until we break out of this range. 538.67. I think we hit 538.62 at our low point, which was right there. There's that low. Finally, what happens? Little bit of bull volume, a little bit of interest. See that slight uptick? We ramp up, showing the bulls increasing interest and breaking through that. We punch a hole, and we manage to ride it out pretty good. Very, very short-term trade. Now you can do two things in this situation. We know this should be a short-term trade. We have a small contained area. This is pretty much, I'm going to guess 80% of the range that we were trading in, but we have 2-minute higher lows at this point. Here's our low, higher low. So depending on where you took your entry, probably stop by. I'm going to give myself a little bit of wiggle room to at least back test this area as a former resistance, as a new support. Watch what happens. We set a 2-minute higher low. We move our stop up to that magical 2-minute higher low level, and we watch the price continue up past 542.87. The whole time we were able to take these 2-minute higher lows and use these. And if this is how you want to take your trades and plan your exits, that's great. What I usually do is, as soon as I'm in a profitable position, I'm going to move my stop up nice and tight. When I see something like 542.87, very likely would take at least half profits there, and I would use my 2-minute stops to protect the rest of my position. Maybe I get stopped out, maybe I don't. But it does let the market decide, and I would have been stopped out. So I would have taken half at 542.87, half at the loss of 2-minute higher lows. And what happens for the duration of the day? Well, we pretty much go sideways back into Chop Town. So we need to take advantage of these short-term opportunities. Last one I want to do, and if you're still watching, let me know. I'll send you a discount code for something. So PLTR, this is more of a setup for, I guess, going into the rest of the week. This is a pretty interesting chart because we had a daily equilibrium, we broke bearish, and now we have this defined channel. So when I'm looking at a chart, I'm pretty interested in what's happening here. So taking a look at the hourly time frame, what I want to do is see if I can demarcate myself a trend. Because I am heading to the upside, I really should start with my supports. So I'm going to go over here, I'm going to grab this little red here, and I'm going to grab this little red here. And what I want to do is make sure that everybody stays in line. I'm going to go ahead and grab that. I'm going to make a clone of it. I'm going to bring it up over here to the top of my green candlesticks. And you know what? That incorporates most of what we're seeing. We get our hourly trend change, and we're off. So why it gets interesting, why it's a setup for later on this week, is that we had a really big day. We got into our area of resistance in the 5-minute time frame, pulled back hard, and now we are taking a moment to rest right against this support level. So if we are anticipating this hourly trend to continue, what we're going to look for is going to be a 5-15-minute trend change and a show of strength early tomorrow to have the bulls pushing us to the upside. If we can see that show of strength, then the bulls have a pretty clear route to a new high over 27.43, or at least a test of this area of resistance. Bulls held well above this area of support, but they need to prove it to us early tomorrow with a nice trend change. And we have almost, well, it's not a perfect equilibrium, but certainly a tightening range down here into extended hours. Let's see where we open tomorrow. If we break 25.13, then I think this hourly pattern will be breaking down, but we're going to be looking for that price action, that validation to tell us that the bulls are in control, they're interested, and they're going to head back up to 27.43. So we'll see if we can do a recap video later. Thank you for watching. If you're interested in more of this sort of analysis, this is what I do all day, every day for a lot of cool people who like to do charts with me. So check out chartguys.com if you want to learn more about technical analysis. You can't afford a membership to chartguys.com. I'll help you out anyway. Just send me an email, give me a call. My phone number is on the website. Ask questions, get answers. That's how it works.